Joining us now, the analyst behind that call, Cowen's John Blackledge. John, thanks for joining us today. Talk to me about what you're seeing in terms of AWS and advertising. What should investors be thinking about that they're not?
Yeah, both accelerated this year, and it really wasn't reflected in the stock. I mean, the advertising business was up, I think, 70% this year, and AWS accelerated. But our call is actually that the e-commerce business is going to start to accelerate in 2Q22, and you're going to have rising margins. Those two things combined, we think will drive shares higher. We slightly raised our back half 22 numbers and long-term numbers, like you said, price target to 4,500 a share, a little over 30% upside from here. We're 1, 6, and 10% above consensus 22 revenue, op income, and EPS. And with Amazon shares trading at 18 times EBITDA, it's like slightly below the midpoint of its historical range. So we think with the improving fundamentals and AWS and advertising will be robust again next year, we could get multiple expansion, and that's why Amazon's our top mega cap pick.
Yeah, and coming up against some easier comps, but I have to ask about that outage last week. You know, Oracle, when they reported their earnings, took a lot of digs at Amazon for being unreliable. Does that kind of thing have any long-term impact?
I don't think so. We've seen incredible strength at AWS, and we've seen an incredible investment both at AWS and data centers, data center growth, and also obviously in fulfillment growth. And that's one of the things that we think is going to be a driver for 22 is the investment in the fulfillment infrastructure. They've spent over $60 billion the last 2 years. The prior 5 years, they spent cumulatively about $40 billion. They've more than doubled the size of their fulfillment network. And while we're going to see comps on the e-commerce side ease as we head into get through 22, you're also going to have the Prime One Day and Same Day driving higher product conversion. So you have two things that are going to be driving the acceleration in the e-commerce business.
John, speaking of fulfillment, this tragedy that happened on Friday when an Amazon warehouse in Edwardsville, Illinois, collapsed, at least 6 dead there. Amazon has said that they want to be the world's best place to work, and there are going to be a lot of questions about the conditions that were in place as this tragedy unfolded. Should we expect that Amazon is going to spend perhaps even a lot more to make sure that something like this doesn't happen again, or is there any overhang, things like that investors should also be concerned about?
Yeah, John. I mean, like I just mentioned, they spent over $60 billion the last couple of years, and it was horrific events across many states. And so yeah, I'm sure they will double back and try to ensure that the safety for their employees and spend whatever it will take to ensure that their employees are safe, going to work every day.
Okay, so from an investor standpoint, your feeling is that the sentiment on the business overall, including cloud, is going to be such that if there is even more of a spend on the capital side for that kind of thing, it won't spook investors?
Well, they've just spent so much. It's accelerated so much the last couple of years that we think it'll start to that growth will start to, kind of ease, and hence we're going to start to see margins expand. We think in the back half of the year, they're going to obviously continue to invest heavily in both cloud and the e-commerce business and other areas of the company. But it should start to ease. I mean, it's been historic investment the last couple of years.
Speaking of margins, how essential is it, in your view, that Amazon increase the price of Amazon Prime? How likely do you think that is, and what happens in terms of consumer reaction and obviously sort of the play into margins?
Yeah, thanks for that question. I think that's a good one. That's something that we called out that we may get. The last time they raised the cost of Prime was 2018. Prior to that, it was 2014. So maybe we're going to go on this, kind of 4-year cadence. And so what's happened since 2018? We've way more than doubled the fulfillment network. They've introduced One Day. They're bolstering their same day capabilities, which is really where this whole delivery speed thing is going. And then also on Prime Video, they've invested heavily in original feature films, original episodic content, and then they got the NFL rights, the Thursday night football rights starting next year. So there's a lot of, I think the way the company thinks about it is like, what have we added to increase price? And with over 200 million Prime members globally, and the prices vary by the country, but 200 million people, you raise it $10, $20 the annual number, you're at $2 or $4 billion of incremental revenue, high margin revenue. And we think, given all the things that they've added since 2018, it would be, it'd probably be fine. And the consumer would be, Prime sub would be fine with it.